Hello, everybody. Welcome to Talk About House. I'm Todd.
I'm Juana.
Okay, today we are going to talk about cash offers.
Hence, I'm wearing green.
Wearing
Cash,
green for
There we go.
cash. They have reached a near decade high in September.
Woo-hoo.
We just got the numbers. This article that this was quoted in just came out today. It's a brand new article. Okay, some of
many
this
things I
data,
could say
remember,
about
it
that.
takes a while to get. You could get the sales prices sometimes, but then to find out like how there's a lag to find out like if it was financed or not, if they paid cash or if there's a lien. So you have these firms that go out there and you can explain how they figure out if it's a cash offer or once it's recorded and it's public data, how do they know?
So they look for a lien, right?
Oh, they look for a lien. What's a lien? What is a lien? What does that mean?
So the lien is where a lender puts a lien on the property, meaning that they have an interest in the property.
Yeah, it's called the deed of trust, trust deed, whatever. It's basically you can't sell the house and get the money and walk away without paying that off.
Correct.
It's a protection to just, I'm going to sell the house and whatever. It's attached to the property. Okay, so they go back and figure all this out and they can tell. Now, you might be surprised to hit the number. Because remember, the video we just did, the last video, home prices in October are the highest ever in October ever.
Right.
They're up, I think, 4.6% over October of last year.
Right. They're crashing up.
They're crashing up. They're crashing. Home prices are crashing up like crazy. Okay. But in September, 34.1% of home purchase in the U.S. were all cash. It's up from 29.5% reported a year early, or according to data from Redfin. Now, let's talk about this. Why would someone want to go pay cash for a house? Give some reasons why someone would pay cash.
So someone would pay cash for a house because it is more financially advantageous for them to do that versus paying interest, because maybe their money isn't earning as much to be able to cover that interest.
Okay.
Maybe somebody would pay cash because they're perhaps fighting against other buyers who are paying with financing. So then their offer is stronger because they're paying cash.
Okay.
Maybe they're, for example, an institutional buyer, right? So institutional buyers, those are cash buyers.
Okay.
Maybe they're a foreign buyer, and foreign buyers have a harder time getting loans.
Okay.
So that's another reason why they might be paying cash. Maybe that's just their financial philosophy, that they don't want to be debtors, and that's why they're paying cash. So there are lots of reasons, and these are just some of them. I'm sure you can list probably 30 other reasons why somebody would pay cash, but that's just a start.
Okay. There's two main things that would drive this. One is high interest rates, high borrowing costs. You wouldn't want to look, if you have, let's say you have $1 million sitting around. We're just going to use $1 million as an example because it's a big number. And you've got it in a money market that's based on government treasuries. Price pays 5.5%. Risk-free, it's a money market. It's just going to pay that 5.5 on the $1 million, which is a lot of money. People are like, why wouldn't you just take the 5? It's like $50,000 a year or plus in just interest, right? Of course, it's taxable. You pay taxes on it. Then you decide, you know what? I'm going to get a vacation house in San Diego. I like going down to San Diego. $1 million will get you a 3-bedroom, 1,800 square foot house in a decent area, right? Because San Diego's pretty expensive. Not in Coronado Island or on like Pacific Beach or La Jolla, but in El Cajon, you get a pretty decent house for $1 million.
Sure.
Okay, so you want to go down there, and you've got the $1 million. It's sitting in a money market, get a 5.5%. You decide, how much should I put down? Well, maybe you decide, well, why don't I put the whole thing down? I just pay cash, right? Because it's, you're playing arbitrage with your money. You're either earning interest on it or you're paying interest to borrow it.
Right.
That's really how it works.
Well, the other thing that somebody doing that is looking at is also the power of inflation, right? Because if they're putting their cash in real estate, then it can be argued that real estate tends to keep up with inflation, and inflation has been on the high side. So that's going to be a consistent rate of return versus the interest rate that they're making in the money market, where that's going to vary over time.
Yeah. There's actually an agent I know in San Diego who works with a bunch of like a ton of players for the Padres.
Mm-hmm.
And there's this one specific area where they've all bought houses
Mm-hmm.
because they think that's an area where the money will stay, it'll appreciate, and they'll be able to keep the value of the money.
Mm-hmm.
So they've all gone to this area and used this one guy, which is kind of an interesting thing. But the idea that there are people, I think there's two philosophies here. We'll read this quote after this. There's two philosophies here.
Mm-hmm.
One philosophy is you're a wage earner and you don't maybe have a lot of savings and you're trying to get into real estate, become an investor and do all this stuff. And you only really, like, this is a budget thing.
Mm-hmm.
Wealthy people don't budget.
Well,
Not in the same way you do.
they budget. Their budget just looks
But
different.
their budgeting is not, can I afford to join the gym? Their budget is, what's the best use of all the capital I have in stocks and bonds? Should I sell some stuff that lost money to maybe get a tax break, or should I, and they're making these random decisions based on tax law, or, like there wasn't that long ago, people were saying, sell your real estate and put it on the stock market.
Mm-hmm.
And then there are now people saying, sell all your stocks and you take the realized losses or take the gains and pay the taxes on them and then use it to buy real estate. So, okay. But the two biggest times when people, I don't know if I said this before, one is to avoid a high interest rate,
Mm-hmm.
which is why we had a record last month.
Right.
Interest rates are the highest they've been in 25 years.
Right. So with the high interest rates, you have more people paying cash. Yes.
The other time that was it was basically 2008, 9, 10, 11, when home prices were at the bottom because home prices were super cheap.
Mm-hmm.
And average people, seriously, could get your hands on, $30, $40, $50, $60,000. You could buy something in Vegas.
Right.
So you could get your hands on a property and pay cash for it.
Well, not only that, but because the purchase prices were so low, there weren't mortgages for that level of house. The minimum mortgage at the time was like $70,000. So if you were buying a $50,000-$60,000 property, you could not get a mortgage on it. You had to pay cash.
Yeah, we had a joint venture with Bank of America. So we had, no kidding, a Bank of America loan officer in our office. And I was blown away, I didn't know this, it was like $76,000.
Mm-hmm.
He says, if it's below that, we can't do a loan.
Mm-hmm.
I'm like, why not? He goes, because they've decided it doesn't make financial sense. Like, we literally can't make any money on it. We can't sell it in the secondary market. So anything below that, we can't do.
Right.
So they were all cash. Okay, here's a quote. Redfin reported that all cash purchases haven't been this common since 2014, when affluent buyers and corporate investors led the housing market recovery after the housing bubble burst 2008. Now, we know in Vegas that 8, 9, 10, 11, about 50%
Mm-hmm.
of all homes were cash. We know that because we were selling 600-700 REOs a year, the bank-owned homes.
Right.
And we were seeing all the offers that would come across.
Right. So what we're saying is that when there were all the bank-owned homes and real estate prices were probably the lowest that in most of our memories, then 50% of the homes were purchased cash. But now that real estate prices are the highest they've ever been,
Mm-hmm.
we're still looking at over 30% being purchased cash.
Yeah.
So that's really interesting. Now, what does that do to real estate values? Well, that's a lot of support for real estate values, right? Because if over 30% are being purchased cash, we already know that basically 42% of homes out there are free and clear. So that just keeps supporting that number of so many homes out there being free and clear, which means that there is not downward pressure on those values. You don't have people who are going to get into situations where they have to sell or they're going to get foreclosed or anything like that. So because of all that price support, that's just going to keep supporting real estate values going forward.
Yeah. Remember, we just did a video on this, but 33% of about a third of all homes sell in the first
2 weeks.
2 weeks. A third in the first 2 weeks.
Mm-hmm.
And in the sellers on average are selling on average 33 days. And ready for this, they're getting 99.1% of list price, which is historically probably what they've gotten for a long time.
Right, and almost 30% of them are getting over list price.
Yeah, it was 29% are getting over list price. So the fact, like what Juana said, the fact that cash buyers are coming in, they're putting their money where their mouth is. They don't believe there's a housing crash. You would be holding your cash and waiting.
Mm-hmm.
You wouldn't, want to do that. Here's a quote from the article. Now this is talking about high interest rates. Okay, These rates are exacerbating inequality between people who own homes and people who don't, Redfin senior economist, can't pronounce it, said. This is probably the only accurate thing Redfin has said in a long time in any of the articles or anything they've been quoted on.
But
This
But this is not a new thing. I mean, we know that homeowners have exponentially more wealth than non-homeowners.
40x.
Right.
It's 40 times.
So we know that. So the fact that he's saying that, he's not exactly the Oracle at Delphi, okay?
No, he's definitely not the Oracle. Here he's overstating the obvious,
Yes.
right? Okay, here's another quote. Homeowners who are being pushed out of the market. Now, it's not homeowners being pushed out, it's potential homeowners.
Right.
So it's a misquote. Due to high prices and rates, not only can't afford a home now, they're not building wealth through home ownership for the future, Bukhari added. Now, here's the thing we've talked about. We did a video on this about a week or two ago where we talked about this, why you should buy. You shouldn't wait. Now, remember, we get criticized all the time for saying, oh, you always say it's a good time to buy. We have never, ever, ever said it's a good time to buy. What we do is we point out what would happen if you waited 2 years to buy a house because you wanted rates to go down to make it more affordable. By the time rates drop 2 or 3%, home prices would probably be up 10%. So you could buy now, suck it up for 2 years, and then refi when rates drop. Or you could wait 2 years for prices to go up 10% to where you can barely afford it, and now you've lost, $40,000, $50,000 of equity that you would have gained. Losing 2 years on your investment is, you can't ever get that back. We're not saying you should buy now. We're just, if I didn't own a home and I was thinking about buying a house, this is what I would do. I would just say I would do everything I could to get a house, even if the rate was kind of high. I would try to get, of course, a house I want to live in, or eventually I'd want to rent out. I would say to myself, I'm not selling anytime soon. I'm going to keep it 10, 20, my lifetime. Let's say I was like a millennial or a Gen Zer. I would keep the house as long as possible, like lifetime thing, because I don't know what home prices are going to do in a year or two, but I know in 10, 20, 30 years, we can look at a chart of home prices over the last 100 years, and they've only done one thing. They've essentially always just gone up on average. So, and then I would deal with the payment amount later. Even if I was upside down, I would still do it, because remember, I could borrow money to do it, and when rates drop, I can just refi the borrowing.
Right, and something that we've talked about before is that there is the possibility of a rate buy down, whether the buyer pays for the rate buy down or whether the buyer is able to get the seller to pay for it, or whether they get a more creative loan where it's the 1-2-3 or 3-2-1 loan. I can't remember what they're called, but basically in the first year you have a lower rate. In the second year it goes up a little bit. In the third year it goes up to whatever the going rate is.
But it's not adjustable.
No, it's not adjustable.
It's a 30-year fixed, but the first 2 years you have a lower payment so that you can save, get pay raises, or rates will go down and you'll be able to refi. Right. So potentially you never actually get to that. If the payment's $2,800 in year 3, but it's $1,800 in year 1 and it's $2,300 in year 2, maybe sometime in year 2 you refi it,
right? And
you get the rates at $2,000.
Right, and the idea behind those is that maybe it's cheaper to do that than it is to do a rate buy down for the whole duration of the loan. So there are lots of different loan products out there that you can look into, have your lender look at, and see what you qualify for and see what makes sense for your particular situation. Because we've talked about this, everybody's situation is different. We're not giving you loan advice, we're just giving you ideas of questions to ask and programs to consider and look into. That's all.
I just thought it was interesting that number of the number of people. Where's the number again? It was 34.1% of homes were all cash in the US.
That's a lot of homes.
and you being a luxury broker, you see a lot of were the $25 million cash? Do you remember?
Well, yeah.
They were cash, right?
Yeah.
$25 million home purchase, 2 of them, right?
Yeah.
They were both cash.
Yeah, and there's a 20, and there are a bunch of them. Yeah.
Oh, the ones over 5 million on average. What are you seeing?
Cash. Yeah.
5 million plus, all cash. Yeah. We talked about this before. The very bottom of the market is like investors, and and institutional investors, cash. The top of the market, cash. The middle of the market, which is like people who work, earn income, and then go buy a house, they're getting the mortgages.
Right. So, it's kind of the same thing that we always know. The people in the middle class, they're the ones who get to experience the economy most vividly.
Yeah. So, but Vegas is over 50% cash.
Yes.
We know that because, like we said, you can go in and look at the title companies have pulled all the data for the whole market. And what's interesting is that it's about half for single family homes. It's much more for condos. We don't know the exact numbers because
Right.
I don't know why they didn't pull the numbers on condos, but we know that more condos are free and clear than homes because of the lower price. They're in the lower price point.
Right. And again, with condos, part of the reason why a lot of investors want to pay cash for the condos is because they'd have trouble cash flowing otherwise because because of the HOA dues. The HOA dues are higher on condos.
It'd be $350 on some of those.
Yeah. And so because of that, they choose to go ahead and pay cash for them because they just cash flow better that way.
I remember at the bottom of the market looking in one of the high rises, and it was the unit was a quarter of what it sold for. You could buy it pretty cheap. It was like 175 or 200 or something. The problem was that the HOA was like 550. It was I think it was one of the Panorama Towers. I'm like, wait, 550, what are these things getting rent? And they're like, oh, they get 1,100. I'm like, why would I buy the thing? For $250, I could buy 2 houses and I get $1,000 for each one of them. Why would I buy this thing at 1,100 and pay 500 HOA? That's like the worst investment you can make.
Well, but a lot of those are second homes. So they're not really meant to be rentals. They're meant to be second homes.
Anyway, that was it. That was all the data.
Okay.
So.
All right, so that was fun. Hope you had fun. Please remember to like the video, subscribe, hit the notification bell, share the video, leave us your real estate related comments. If you bought one of those second home high-rise units in Vegas, let us know how that turned out for you. And we'll see you in the next video. Bye.
Bye.